the ideal choice for your crypto journey. This isn't just about picking a winner, it's about empowering you with the knowledge to make an informed decision that aligns with your individual investment goals and risk tolerance. So, grab a coffee, settle in, because by the end of this, you'll have a clear picture of whether Gemini's institutional-grade security and comprehensive offerings, or Robinhood Crypto's simplified, commission-free approach, is the right fit for you. Let's start with what often matters most to investors, the cost of doing business. When it comes to fees, Gemini and Robinhood Crypto operate on fundamentally different philosophies. Robinhood Crypto famously boasts zero-commission trading. On the surface, this sounds incredibly appealing, especially for those looking to maximize their gains by minimizing trading costs. However, it's crucial to understand how Robinhood makes its money. While they don't charge a direct commission, they often generate revenue through payment for order flow, PFOF. This means they route your orders to market makers who then pay Robinhood for the privilege of executing your trade. While this typically results in slight price differences that are often fractions of a cent, those fractions can add up, especially for frequent traders or large volumes. Think of it as an invisible spread baked into the price you see. So, while you're not paying a direct fee, you might not always be getting the absolute best market price on every single trade. Gemini, on the other hand, is transparent about its fee structure, which can vary depending on the platform you're using. For their basic mobile app and web interface, they typically charge a convenience fee and a transaction fee. As of early 2025, you might see a flat 0.5% above the current trading price as a convenience fee, plus a tiered transaction fee. For orders under $10, it could be 99 cents, scaling up to 1.49% for orders over $200. This means that for a $200 Bitcoin purchase, you might be looking at around a 1.99% combined fee. However, Gemini also offers its active trader platform, designed for more experienced users. This platform employs a maker-taker fee model, with fees significantly lower than the basic interface, often ranging from 0.03% to 0.40% for takers and 0% to 0.20% for makers, depending on your 30-day trading volume. The more you trade, the lower your fees become on active trader. So, while Gemini's basic fees can be higher than Robinhood's hidden spread, their active trader platform offers a more competitive fee structure for high-volume traders who can take advantage of advanced order types. Also, something to note is that Gemini charges a 3.49% fee for debit card purchases, while U.S. bank account or wire transfers are generally free, though your bank might charge its own fees. Now, let's talk about the bedrock of any financial platform, security. In the volatile world of cryptocurrency, security is paramount. Gemini has long positioned itself as a security-first exchange, and their reputation in 2025 continues to reflect this. They are known for their robust security framework. A significant portion of customer digital assets are held in offline cold storage facilities that are geographically distributed and air-gapped, minimizing exposure to online threats. They also employ asset segregation, meaning customer funds are kept separate from Gemini's operational accounts. Two-factor authentication, 2FA, is mandatory for all users, and they even support external hardware security keys like YubiKey for an added layer of protection. Furthermore, Gemini offers address allow listing, letting you pre-approve withdrawal addresses to prevent unauthorized transfers. What truly sets Gemini apart in terms of security is its regulatory compliance. As a licensed fiduciary and qualified custodian regulated by the New York State Department of Financial Services, NYDFS, Gemini undergoes regular third-party security assessments, holding SOC 2 Type 2 and ISO 27001 certifications, and conducting annual penetration testing. They even offer FDIC pass-through insurance for uninvested cash and crypto insurance for assets held in their hot wallet. Robinhood Crypto, while taking security seriously, approaches it from a slightly different angle, often focusing on ease of use alongside protection. They emphasize their Robinhood Protection Guarantee, aiming to protect accounts from unauthorized activity and providing multi-factor authentication on all accounts. They also state that they are available 24/7 for support. However, it's important to remember that cryptocurrency held through Robinhood Crypto is not FDIC insured or SIPC protected, which is a key distinction from traditional brokerage accounts or some aspects of Gemini. While Robinhood has implemented various security measures, Gemini's extensive regulatory oversight and proven track record of robust security audits often give it an edge in the eyes of users who prioritize institutional-grade protection for their crypto holdings. Next up, let's explore the range of digital assets you can trade on these platforms. The more cryptocurrencies available, the more opportunities for diversification and engaging with emerging projects. In 2025, Gemini offers a solid selection, supporting around 80 cryptocurrencies, including major players like Bitcoin, BTC, Ethereum, ETH, Solana, SOL, Dogecoin, Doge, and various ERC20 tokens. They've also been expanding their offerings, notably with the launch of tokenized U.S. stocks in the EU, allowing users to gain exposure to traditional equities like Apple, Microsoft, and Nvidia through a blockchain-based mechanism. This is a fascinating development that blurs the lines between traditional finance and DeFi. While their direct crypto-to-crypto trading pairs might be somewhat limited on their basic platform, ActiveTrader offers over 100 pairs, catering to more advanced trading strategies. With that said, thanks for watching, and until next time.